Aloha everyone. My apologies for not making this video on Saturday. It's Sunday, so let's go ahead and get into it. I do have 8 long positions, brand new ones, and the new positions section for high quality longs. You will notice in the commentary I say, I don't love any of them. If you're looking for a long idea that I love, that I believe has an extremely high quality success ratio possibility, none of these make it. What do I like with all these new long positions? Those amazing potential reward to the inherent risk ratios, especially considering that all of them really only have one stop level. Some of these on my own, I'll be splitting them up and having 2 stop levels, but I'm only going to list or mention the one that I want everyone to follow if you decide to take any of these trades. So first off, the best overall one, I guess, is safest quote quote overall one is NVO. This one came out of my cancel 'em scan. It was confirmed in my price volume BOP scan. Bullish candle print right on top of the 50-day moving average with the 5, 10, and 20 nearby. Pocket pivot point set signal on above average volume with BOP, RSI, and MACD confirming. I'm looking for a measured move similar to this move here back in March, possibly this entire move from November to April for that inherent risk to right here. So we're not going to risk much at all. So NVO, I want to get long at 49.98, the high of the day, and the first cut loss level 48.79. If you want, you could also have a second one here. I personally do not recommend it. I don't like the chart that much to do something like that. Then the next longest long signal, and one that appears to be gapping up because I believe I read that they're going to buy CAVM, is MRVL. This is a longer term chart going back out to July of 2016. You can see the huge accumulation and the green BOP that started the move. It's trended higher ever since. On that April to June leg, heavy accumulation, pulled back, lower volume in the pullback, started to move up again on heavier volume. Flatlining, below average volume. The bars that stick out are the green bars, so that's kind of the stuff that I'm noticing. And right here we have a bullish candle over hammer candle pattern, above average volume, green BOP. I want to get long MRVL 1855. The first cut loss level 1785 should be the only one for anyone that decides to take this trade. But me, I might go here, and then I also might use this one right here, which is 1749.48. I haven't decided yet. We'll see. But on this one, I believe I will have 2 stops on MRBL. Then really the next one that's of high quality, they kind of, let me go ahead and just go to the ETFs. Now these are not ideal signals if you're looking to have some extreme price moves. But if you want to get your toes in the water with this methodology, it's always safe to play the ETFs. And I have a clear buy signal in IYH, engulfing bullish open body bar candle, above average volume, the max green BOP for the past 20 days. That's what basically confirmed it from my ETF scan. Want to get long IYH at 172.21. The only cut loss level is 170.15. So IYH is either going to move immediately and correctly, or we're going to risk about 1% of our capital. And the measured move I'm looking at is the move back in November. So to risk only about 1%, I'm looking for about a 20% gain. You know, folks, 20-to-1 reward risk ratio, that's what I'm talking about. It's not necessarily the signal, it's that reward risk ratio. And when you're trading with the account size to the commission cost of me, remember, on the smallest trade size, as I wrote in the commentary this weekend, 0.1% in is my commission cost to trade size, 0.1% out for a total cost on trade of 0.2%. Not 1% of my capital in, 2% of my the trade size out, or 10% in and 10% out, needing at least a 21% return to make money. It's 0.1% for the smallest trade I make in, 0.1% out, and for the largest trade size I make, it's less than 0.05% in, 0.05% out. So the commissions cost me nothing to potentially be way right compared to where I'll be wrong if I am wrong. And like I said in the commentary, none of these are great, but if I don't take any of these that signal and trigger, and that one stock moves up 20% while the rest either fail or barely go up, I'm going to hate myself, because it's 8 signals, not 7 long positions. It's 8 signals, 8 long positions. if I had a small account size and I was forced to have to pick one to load up in, there really isn't one, but I'll get to the one I might pick. CEE is the next one. CEE, another closed-end fund, or ETF, I guess you could say, but it's a closed-end fund, and normally I don't trade closed-end funds, but CEE does move when it moves. So just from this move here in December to the recent highs in October, that's a nearly 30% move. I risk about 1% before I know I'm wrong. So once again, we're looking at an over potential 20-to-1 reward risk ratio. And look at the move off the 2016 lows. 62%. So this isn't your usual closed-end fund. Normally I tell everybody do not trade closed-end funds, but CEE has some alpha. So I want to get long CEE, 24.63, the high of the day. My one and only cut loss, these recent lows, 24.35. It moves below 24.35. I will be all out of CEE. Next up, CY80. This is the higher price name for my Perfect Speculator scam. Once again, look at the potential upside. We get right around a 200% move up, and what's my risk? 3%. So I want to get long CY80 at 57.51. My one and only cut loss is right there, 55.90. It moves below 55.90. I'll be all out of CY80. But a thin stock, like I said, none of these are perfect. Do you notice the red bop here? Unless you see Max Green Bop or Green Bop for like the past 150 days and all green tall price bars and tight price basing action, like PTN coming up here, but instead of just seeing this for about half a month, you see this for about 2 months. I'm not going to love anything. But that then led me into PTN. So PTN, if there's any that I was forced to take this evening, it would be PTN, because it has a chance to be a major winner, a major runner, and my cut loss level area is right there. Now, you don't know if you don't go long, if it doesn't move up right away, they could have a secondary and this thing could gap down into the 60s. I don't think that'll happen. So with PTN, I want to get long at 0.74. A move below these lows, I would be all out. I'm going to be a little more risk adverse and put half at 72, right below 72, and half right below 69. But I recommend everyone using that 72 low. If it moves below 72, get completely out of PTN. But PTN, I was saying earlier, if there was any one that I would put my capital in if I was forced to take any one trade, it's probably this one. This is the best overall looking technical pattern. It's coiling after extremely low volume. My momentum and trending RSI 14 and MACD oscillators are starting to coil turn. So this might be the one I pick. But that being said, it's under $1. It's a piece of shit until proven otherwise. So keep that in mind. And then VRS is one of the nicer looking ones, but it's a little extended and earnings are coming up. So I probably recommend every single person watching this video avoid. Just watch for my insanity. I'm going long VRS. It's a perfect speculator quality at 729. Your one and only cut loss level, and the only one I'm using is 685, or you could even use 680 here at the 1020 lows. And I think I might do that since there was such a big previous price bar and 680 and 685 are so close. I'm going to go ahead and use 680. But VRS, this is one of the better looking technical patterns, but with earnings coming up and the stock being extended from its 20-day moving average, it is very risky. So keep that in mind. And then that leads me to the last long trigger, and it's probably the best one overall, I would say, besides, NVO and MRVL, but MRVL is going to gap as SYNT. Let me open this up a bit so you can see that open candle pattern. There you go. You got the open body there. Now you can see that the close is higher than the open. But nice move higher off of the earnings, pulled back on relatively lower volume compared to the uptrend, starting to curl higher again on above average volume the past 2 sessions. Even though BOP is falling, BOP still increased from the session before. It's still in the upper end of the green BOP area. This is a bullish reversal hammer candle over candle pattern. I want to get long SYNT, limit order 2361. It's tad extended, so that's why I do not want to chase it to the high of the day. And my one and only cut loss, 2252. It moves below this low here, 2252. I'll be completely out. But they're all pretty good long positions, but none are great. They all just have that excellent reward to risk ratio by looking at previous measure moves. So CEE, look at that previous uptrend. MRVL, look at that previous uptrend. IYH, look at the previous uptrend. SYNT, look at the move from the July lows to the October highs. PTN, the same thing. VRS, CYAD, NVO. The potential reward, if it's any kind of move anywhere in this area compared to the inherent risk, is well worth all of the trades. That's why I'm taking all 8 of these for Monday. All right, everyone. I'll see you in the chat room during the pre-market session on Monday. Aloha.